Now
knew
we're
it.
live. Now we're live now. What's up, everybody? Welcome to DCTV. Guess what? There's no countdown. We're just coming right at you. Don's dream came true.
Yeah.
No, my dream didn't come true. I had to sit for 5 minutes for literally nothing, and then everyone else just gets to just enjoy the show right off
here's
the
the
bat.
worst. Here's the worst part, guys. The 5-minute countdown did run for us, but we didn't run it for you guys. So our apologies.
Listen, this is not the first time that P. Smith has ever done this. I once went live, quote unquote, live on my channel for 20 whole minutes. I was just talking and yapping and not even paying attention to the chat for 20 minutes, just talking.
Or his phone while I'm texting him, like, I don't think you're live, man.
Yeah. Don knows. This is typical B. Smith out here. So,
Man,
guys,
hit him with the poll, though. How long should that intro be? We got 1 minute, 5 minutes, 2 minutes. Let's go with sweet spot.
listen,
can set it
there's
as a
plenty
poll.
of channels that do 5-minute countdowns, and you're just sore about it. I don't know why.
$5 foot long.
5 minutes? What are we waiting 5 minutes for? I would never
For
watch
people
that
to
live.
come in. It isn't about you. It's about the people, God damn it.
It's about the people.
Yeah.
They're probably looking at it like, I'll check back later.
Pick up, go
And then they
get
forget
breakfast.
about it.
Yeah, leave our effective altruism alone, Don.
That's right.
That's
It's
right.
not like
right.
Brad would set the
Give
stream
it all
and
away
he'd get
anyway.
alert like 30 minutes before. And I'd always click on that alert. I'm like, oh, cool. He's going live. Let me hop in. I'm like, oh, fuck, I gotta wait 30 minutes. And then like I would leave and then just like forget to ever get back. Like,
That sounds like a Don problem, not a me problem.
am I the only one in the world that does that? Like I have,
Yes.
I have notifications turned on for a reason because I want to know when you're going live. I don't want your planner. Write your diary somewhere else. Like let me notify
Heard.
you.
Ladies and gentlemen,
we
Don
heard.
is not a planner. Shocking. He shows up 30 seconds before we're supposed to go live, or sometimes during the countdown, which is why we need it, because you don't fucking show up.
Asset Trader has different view of time. Shocker.
Yeah, every minute accounts for.
He just sees it as candles. Yeah.
Welcome to Monday, everyone.
That's right. Welcome to DCTV, guys. Thanks for tuning in. The markets right now are down 11, not a whole lot, but basically marginal. The S&P is down 0.25%. That's down for 11.25 points. I don't know why I went into decimals there. The Dow's down 37 points. Nasdaq's down 67. Oil is down to 87.94 for WTI crude. And Bitcoin is actually up about 0.4%, sitting at sitting up 68 points at 16,730 per Bitcoin. FTT last I checked was at $1.50.
Yes.
And it ain't coming
Opium.
back up either.
Bitcoin was in the 15s last night.
Yeah.
Yes.
Yeah, like each thousand, like, oh, there it goes. We just cracked that like floor just a little bit lower. I'm like, oh, new number.
It's coming down, boys.
Yeah.
Boys on the corner selling crypto.
Yeah, exactly. So today's show, guys, we're going to be recapping obviously everything that's been going on with the Sam Bankman-Fried saga. If you guys caught us on Saturday, we went live again, another special live stream because him as well as some of the executives and Caroline, so far as I know, I mean, I talked to Jaime about this yesterday. We're going to be talking about that a little bit too, but it was Caroline Ellison was on her way to Dubai, and now she's actually detained. There's a lot of mixed stories out there, but we're going to try to straighten out the best we can. But Jaime, before we get into any of that, why don't you guys show the class what's going on with Bitcoin?
Okay.
Hey, real quick, are they? RIP.
they just
Maybe we had
yeeted out of here.
Intro, we could get these bugs out.
Yeah, exactly. Well,
maybe
yeah,
you know
talk.
that- Are they in holding cells? Are they actually detained, or are they?
I
just-
have not.
know
I
where
have
they're
not
at?
seen any official report that either one of them has been detained. There are lots of Twitter reports out there that I know SBF has been detained. This is actually the first that I've heard of Caroline and her Harry Potter ass being detained. But I don't think that we have any official,
But-
for sure this is where they are. Last I heard, SBF was in the Bahamas. So
So
and
not in
so was
a
Caroline.
holding cell in the Bahamas, just in the Bahamas. They're just keeping.
I
an eye on
actually,
it.
I crypto Twitter has said that he is being detained by, that he was going to his compound in the Bahamas, which is apparently for sale for $40 million now, but he has been detained by the Bahamas police, and I guess is awaiting the U.S. to come get him. But again, all unofficial.
This
wonder
is
where
this
you
is
get
unofficial. It's not just Twitter though. So this is according to Cointelegraph and many other media outlets. Maybe they're just coming off of Twitter, but we did actually stress that on Saturday too, that this is according to these news outlets, and that we're not the ones actually making claims that he's being detained.
Yeah. Oh, you hopped off right as I was asking. I didn't know if it was the question was, are they in a holding cell, or are they just like, hey, we're watching you, so get comfortable and don't go anywhere, because if you try to flee, then we're going to detain you.
According to Cointelegraph, they were detained, sorry, by the authorities, which means that they are
Yeah, but knowing the Bahamas and the area, it's detained, meaning you can't get out of this island.
They're under supervision.
Yes.
Detained
So
simply
house
means
arrest.
that you do not have the right to freely move.
Yeah.
Correct.
Yep.
You have to stay where they tell you.
Do you think he paid for that?
Absolutely.
Do you think he paid for that house in cash? Because before they freeze all assets, if it's still for sale, you think you can make them like a fire deal and just like offer him 20 million? Like, hey, you're gonna need this for legal anyway.
I doubt it. They didn't seem to do much with anything but false leverage, so I don't know why they'd buy a house with cash, because that would make sense.
True.
Yeah. Oh, that's interesting. His dad's involved now.
Shocker.
Yep.
Their whole family has been, I think.
Yeah, they're deep involved, man.
Yeah.
You
In
got
uncles.
everybody on at least the
entire
U.S.
Potter
one political
family.
party side involved in this now.
Yeah. Yeah, it's been quite a shit show in that sense. And it's just insane how, when you look at each one of their backgrounds, someone's related to someone on the legislative side, on
It's
the power
incestuous.
side.
This is the swamp. This is a perfect example of the swamp we have been warned about. And this is just one example, one topic. It's thick like this all over politics. And I don't know, you just got to pluck these leeches off one at a time if you really want to get something done. But it's going to be hard to do when so many people believe the BS.
And
Yeah,
that's
education's our biggest powerful tool here.
Yeah.
Absolutely. And the fact that they're trying to push legislation that was drafted or written by the, Sam Bankman-Fried is one of the leads in this, and, in bed with the SEC directly and indirectly. I mean, there's even photos of their visits and conversations with each other. So it's concerning to see if they do push all this legislation, what's the outcome? I mean, it's the usual. They were trying to run all this as a bank, trying to become the middleman. And now legislation is going to come where all of the sheep or the non-sophisticated investors are the ones that are going to be paying the price in this. So when it's going to give the advantage to the institutions and the banks, this legislation that's coming, not to the common folk or the people who actually do their own research. Of course, there's a lot of people who blindly, like we were speaking earlier, invest without seeing or understanding what this technology is, in the hopes of becoming rich. So yes, agreed, there is a problem there, but don't restrict it to such a degree that people who do their research are now paying unnecessary fees for a middleman to validate or insure or do all this banking stuff that was the source of the problem anyway, because they bailed their buddies out instead of everyone else. I don't know. Go ahead, Don.
I was gonna say it's probably been tough for a lot of people to discern the two, because Bitcoin went on such a run. So that whole entire bull run, there's been whispers of a crypto winter. Sure, that'll come down, but that got chalked up to, oh, you're just bearish crypto. But think of how many YouTubers they were following. Think how many YouTube videos, thumbnails during that bull run. All they saw was Bitcoin's going up, and it just got staked into their brain that Bitcoin's going up, that they completely forgot the fact that it doesn't have to always go. Like, things can come down. That next candle is going to be red or green. Just because it was green for a while doesn't mean that red one can't come around the corner. And I think people got a little too relaxed and a little too comfortable. So hopefully something this big at least is a painful enough reminder that things can turn on a dime. And then, can you afford that? Should it do that?
It's healthy too. It's market recorrection. Like, that's totally fine. We should be correcting in the market. If we don't correct, I'm concerned. Like, I actually get kind of like worried when I start seeing just green candle, because I know tons of people hopped in, get rich quick, and they're gonna get beat up because they have no idea how sophisticated the scalpers can be.
Right.
Yeah.
No doubt about it. I mean, I was telling Jaime and some people off cameras. I mean, like, people are talking about that, central exchanges won't be able to recover for years from this and all that. I call BS on that completely. I mean, because all that's going to happen is, like, little exchanges will be absorbed, for the users by quote unquote safe, bigger central exchanges. Right now, he's looking at you, Binance. I mean, like right now we have in our brains that Binance is the good guy, Binance is the safe guy. Maybe they are, but I wouldn't put all my money in that pot. Again, we've talked many times about how something could happen to CZ, be it as simple as an accident that floors him, or just he changes his damn mind and he's not as good of a guy as he appears to be. That just happened. So don't act like that cannot happen to CZ. But I mean, the same type of thing we were talking about happened when Mt. Gox went under. For those that have, this is their first pain cycle to go through in cryptocurrency. We've been here before. Mt. Gox was FTX. I mean, and when Mt. Gox went down, the first time this happened, Bittrex and Bitfinex, they were considered the good guys. But the reality of this space is that in 6 months, this will all be forgotten. All the people that are hurt by FTX right now in this entire string of collapsed cryptocurrencies and exchanges will be forgotten. It'll be replaced. And there'll be new Twitter identities that come out, saying that they're OGs now because they survived FTX. They'll be talking about the obvious bottom that was with Bitcoin and how much money they've made since. I mean, it's just a rinse and repeat of what's happened in this space. Mm-hmm. We were talking about the next Bitcoin halving is March of 2024. And I think that's probably our worst case scenario for how long this particular bear market will last. I mean, and this FTX stuff doesn't mean that corporations are not going to come in and invest in crypto. They absolutely will. It just means that they'll pay a premium to have it custodied by an FDIC regulated authority. And I don't think it's coincidental that we said that Fidelity just opened up this type of service earlier this month. So last month, you're going to argue, why would someone want to pay to have Fidelity hold their coins? And now we're going to be today, we're like, hey, is there any way that we can store our coins and have them regulated and insured? So, I mean, it's just how the space works.
And we're going to continue this conversation later in the show. I do want to get to some other parts of what we wanted to discuss first. Just to,
spicy.
Make sure we stick with.
We did skip Jaime real quick. Did you have a quick thing on the charts?
Yes.
Actually, one thing I wanted to point out with
you know what, Don? Thanks for that. I appreciate you bringing us back to the ground here. I think. Thank you.
Brush your beard for you. Thank you.
All right, so let me get the weekly. I think that's where we can see the more telling information. Share this tab instead. And on the weekly, here's what we're seeing. We broke that support last week on Sunday, and we are now working our way through this week. So we are now, for us to be able to recover slightly or get back up there, we'd have to close above this low level set way back in June and close above it and continue on up. But at this moment, it's not looking too hot. And based on the news and everything else, it remains to be seen if we are going to recover quick enough. I think that it's too... Yeah, I'm going to the news at this moment, but looking at the chart itself, we are confirmed below the previous June lows. Now, the big question is, will we continue down or recover? That remains to be seen. We still have our targets below this. It's just a matter of time now. Will we reach it? Will we not? So that's all I had. Is pretty basic, Don.
I thought you had. I remember you had not a bunch of lines, EMAs, because I was going to say, like, if there's a basic visual for people that do want to toss up EMAs, when they just look stretched out like a slinky, probably not the best time to just be buying this thing up. Like if you had 3 or 4 on there, you can see mid-screen they're kind of close together. I mean, if there's a quick visual just to jump into a chart and look at something, the 4 EMAs just. I'm sure there's popular ones YouTubers talk about. Mm-hmm. You'll see where they converge together, and you'll see where they just get really stretched out. That really stretched out, we probably ran too hot for one directional. for One Direction, and we need to probably chill out. So I would wait for something like that to happen before I went jumping in. If I was a brand new person in this, I would at least take that away and say, all right, we look like a slinky. I get the FOMOs there. Every other post on Facebook is about this, but that's typically where it tops right around the corner. So I'll wait for them to chill, either pull over or pull back. And that right there would save you from quite a bit of pain.
Absolutely. And there's that slinky you were speaking of. This is the 3-day chart. And we just tapped on that 50 moving average and boof, took another diarrhea dump. So, and broke a new low. So yes, agreed. Like Tam says, it has been advising from day one. When you don't know, do nothing. Continue doing your dollar cost averaging and everything else, which is the safer entry, but do not put your family nest egg into something that's so violent at the time. Let things settle.
Yeah. You can only lose your ass if you put it out there on the line. Don't.
Just don't. Absolutely.
Yeah.
And that's all. It's pretty, now it's definition with time of where we're going to end up at.
Perfect. Thank you, Jaime, for that. Now, we will be having some more discussions about the entire SBF debacle. It has been an absolute shit show, to say the least. We will have some updates on that coming up. But first, I wanted to get into some WTF news. Let's just break it up a little bit. So there was an angry man, guys.
Florida.
Nope, Colorado this time.
Oh, weird.
On the
Angry in
street.
Colorado?
Yeah. Apparently so. He didn't have his.
Was he out of
brownies.
guppies? Jeez.
Yeah, I was gonna say he didn't.
Probably.
According to police reports, he went completely batshit crazy at the Salt Lake City International Airport after being told his flight back home to Colorado was canceled. Over the next hour or so, the upset man went into a rampage. He carjacked 2 vehicles, attempted to steal 2 others, and crashed into several other cars as he escaped from the police. The carjacking spree left multiple people injured, but fortunately, none of them were life-threatening. The man had been arrested and stands accused of a rather hilariously long list of violations. Well, I mean, I've been pissed before on canceled flights and delayed flights and everything else, but that is fucking crazy. Like something else had to have been going on at home.
It had to be.
Yeah,
right?
Like his candle loses his mind. And then
like his wife must have said something to him before he left the house. I don't know.
Why's it got to be his wife's fault all of a sudden?
I'm just saying.
Come
I'm
on,
just speculating.
Does he live in Colorado? Was the flight to Colorado or away from Colorado?
Did he have a deal going down in Colorado?
Yeah, I don't know.
Was he in Colorado on vacation and found out his wife she had a staycation, maybe a little more fun at home, and then he's like, I gotta get home, and then turns out that flight was canceled, and she gets a little more bang time.
Right. I guess
maybe he uses street drugs and made terrible decisions. Who knows?
He could have done that too. He could have taken some bath salts. I guess that's also possible.
Lavender's my favorite. Like what?
As long as they need someone's face.
Bats.
But how do you make even that decision? Like,
To just-
and
I'm
start
so
running
pissed.
to
I'm
the
gonna
parking lot?
carjack somebody, and you know what? I'm gonna carjack somebody else.
Oh my god!
He had a mission. That dude was getting somewhere. He's like, I'm gonna get somewhere, and this is faster than walking or running. Get out of your car,
Dude.
And then he made it happen.
Yeah.
Unbelievable.
Lucky he didn't get killed. He's lucky he was in
know.
Salt Lake City and didn't pull that in Texas or the likes.
Yeah.
Yeah.
That
His
would've-
ass would have gotten shot quick.
yeah.
Yeah,
Dude,
there's probably a
if
few
I
others.
saw it, it's actually got shot quick.
Yeah. I mean, just can't say something I know, but yeah, you're getting shot like that. Like, get out. Hey, you're right. All right, I get out. I can shoot better when I'm standing up anyway.
That's deplorable behavior. Yeah.
Yeah. Bergtown Music Group says GTA 6. Pretty much. All right, guys. So that's your WTF news of the day. Before we get into anything else, make sure you're hitting that like button, hit that subscribe, and then also make sure you check us out in Discord too. It's absolutely free. The link's in the description. Anything that we discuss here can continue over there on Discord. We'd love to have you guys hang out in our community and just continue to build that. It's been a really amazing start in the revamp to DCTV. If you guys are new to the channel, DCTV was big back in 2017 and 2018, took a little break, and now we're back. We've been back for about 3 months, and it's been an amazing ride so far. So we certainly appreciate some of the OGs that are back with us and some of the new peeps as well. Moving on, Sam Bankman-Fried breaks his silence on Twitter.
I saw that.
Yay.
I don't know if I'd call
God,
it
yeah,
fake.
what is it?
That was it. That's
he
the
loves
tweet.
this attention, man. He loves it.
I wonder if they're confiscating the phone. You got another one? Here. He didn't finish his idea. You know, like
Well, so there's this one, and then it was a thread, which was very intricate and well thought out, and it was just H.
See,
You got to scroll down more.
what kind of Wi-Fi do they have in the Bahamas? They're going out. Does the guy just need help? Does Starlink need to reach out?
I don't know what's going on, but some of the comments were pretty hilarious. Unusual Whales just says, "What the fuck?"
Well, no. Sam Bankman-Fried just tweeted what?
Yeah,
right.
That's
so
all he
everyone
did.
else on the replies are completing the idea.
They're filling in the blanks.
They're filling in.
Kobe
Four.
and Seth Lee and a bunch of the crypto personalities got in on it, and they just they were one replying answer, so it ended up saying something like, "What the fuck is happening?" If you just
yeah, they're all pretty hilarious. So if you guys didn't catch Saturday night's stream, we did report that there was some detainments going on. Gary Wang also detained along with Singh, can't remember their first name, which is another executive over there at FTX. And then Caroline Ellison, who is the CEO of Alameda, also detained in the Bahamas on the presumption that they were actually going to be fleeing the country to Dubai, which is a country in which the U.S. does not have a treaty with for extradition. Correct.
Yeah.
So
plot thickens.
Yes. And there's a lot of takes on Twitter about not just this, but the whole situation. CZ's been very vocal, not just about Sam Bankman-Fried, which she's also gone in pretty hard on this weekend, but then also just what it's done or what it's going to be doing for
the industry,
for the industry itself. Yes. Thank you.
Yeah. And see, he's actually launching a fund for the industry itself because here's what you're seeing Sailor mention it. You're seeing CZ mention it, where we're about to present this, but the outcome is legislation, the pushing of laws. So it says to reduce further cascading negative effects of FTX, Binance is forming an industry recovery fund to help projects who are otherwise strong, but in a liquidity crisis. More details to come soon. In the meantime, please contact Binance Labs if you think you qualify. And what he's seeing is everybody, sinners and guilty ones alike, are paying in the lack of liquidity so they can continue building. And he also, there you go. The second one is also welcome other industry players with cash who wants to co-invest. The crypto industry is not going away. We're still here. Let's rebuild. And you're seeing a lot of people jumping on to push for this recovery, or at least sustain projects that are real.
Yeah.
Sustain projects that have a real life, real use case. And on top of that, preparing, he also tweeted on legislation is needed. The problem is, if the legislation that's being pushed that was co-authored with all the guilty parties in current legislation, like the SEC, everyone that was in bed with FTX. Come on, the World Economic Forum was also in bed. And now all of a sudden they yanked anything to do with FTX. You're seeing a lot of that yanking and removing the relationships that they had with FTX. It's like, guys, what happened to due diligence? And now you're about to push legislation that was authored by this entire group of people that are supposed to be leaning. The signs aren't good. And that's one of the things that CZ and a lot of industry leaders are trying to overcome, because it's going to restrict, if you're into good projects right now, Bitcoin is seen as a commodity. So there isn't that much risk. Even Saylor mentioned that. He says it's a commodity, so there won't be much negative legislation towards it. So it will be a winner. But everything else, SEC, their stance is everything else is a not an asset, a security. A security, and that changes the ball game. And there's a lot of restrictions that come, and punishments, and all sorts of middlemen shenanigans, where now any common person won't be able to have easy access to a good project, only the sophisticated. And now you'll have to funnel your money with all their fees tied to it so you can invest in an industry that is solving real world problems.
So what's the answer then, Jaime? Like, I understand your point as far as like this could be bad because of, you know, it helps out sophisticated investors more so than it does the little guy. But also some of the regulations were put into place in regular exchanges to protect the idiots that don't know what they're doing, right? Like, there's a lot of dumb people out there, and there's reasons why, you know, there's got to be labels on everything from you know,
Sadly,
Tide Pods
true.
included, right? So I guess my point is, like, where's the line, and what regulations actually do need to be imposed and which ones shouldn't be? Like, obviously I don't think it should be a mirror of what we have in the regular exchanges and fiat currency and traditional finance, but where's the line at? And I think that that's where a lot of people are trying to get that question answered right now. So, and your thoughts, and I'd love to hear from everybody else, like what's the actual answer here?
So transparency, I think, is the key element. So what the industry is pushing at this very moment, the industry itself, not through legislation, but the industry is like the proof of reserves. So now, you know, hey, do they have the money that they say they have? So is this a legitimate, unlike what just happened with FTX0, assets listed in bankruptcy docs, yet it shows 0 Bitcoin. And yet they had 1.4 billion in Bitcoin liabilities. And this is according to the Financial Times. There was no transparency.
Right.
And so many other things where transparency was called, and that's what triggered this whole demise. So transparency is one of them. And the fact that, come on, if we're going to legislate, continue with transparency. Don't go yanking like the World Economic Forum did. Oh, we have no relationship with these fools.
Right.
Or no, everybody's guilty. Everyone that got rug pulled, a lot of them didn't have the sophistication or the insight that the, let's say, CZ had. Well, if that insight would have been transparent from the get-go, now people can make even better decisions that, oh, shit, I think all their money's in FTT, their own freaking token, and they're taking loans against that very token.
Yeah.
And they're using client funds. God damn it. These guys are, you know.
The double leveraging.
Double leveraging. So anyone who understands the information presented could make these determinations for themselves. So I'm looking for transparency above all. And part of that transparency is also, let's say, the YouTubers that were shilling the shit out of all these exchanges that are now melting down. A lot of them wouldn't even declare, hey, I'm being paid to do this, or break down the details of their financial arrangement with the institution they were shilling. Shilling is when you're trying to sell, you have a financial gain, but not necessarily your users or the people you're
shilling is when you're being deceptive about promoting something, and it's fine if you're like, hey, I have this product that I'm selling, but it's another thing to be like, dude, I'm investing in this, it's so good, but really you're not investing in it, you're selling it, and you're being deceptive to the people.
I think there's a line with the FTX, and I don't disagree with some of the points that you're making, but I think as far as the creator side of it's concerned, I mean, you got to think about Tom Brady got duped, Steph Curry got duped, the Miami Heat got duped. So you have a couple of YouTubers that are like, oh, if FTX is going to pay me $40,000 a month to promote their product, yeah, I'll fucking do that.
That was one. The others made quite a bit more.
Well, yeah, I'm just saying, like, I'm just throwing a number out there. So I'm not saying that they were necessarily doing it deceptively. I think it was like, oh, I got all this money and a lot of them actually admitted it. They were like, listen, I got tossed this huge chunk of change, and I was like, fuck yeah, I'm gonna, like, you know. And so,
but be transparent.
Yeah, for sure. I'm not not knocking that at all.
After the fact is the
But most people were like, hey, now that you've lost all of your assets, but I just want to become clean. By the way, they were paying me the whole time, and here's what they were doing, and I didn't feel good about it, and I'm sorry for that. And I think that's good to say sorry. It's commendable, but damage is done, dude. Like,
for sure. But then should the Miami Heat be held to the same standard? I guess is what I'm saying.
F those guys.
Are you talking team from a standpoint?
All of them.
Yeah.
Don't be
I'm gonna touch that one.
No, I'm with you because I do want to, like, this is something I was talking about on my stream in general. People there has to be a certain level of accountability for yourself as well, because they were just playing the YouTube game. Could they have done better? Maybe not have pushed this much. Sure, they were just collecting a check. It's what a YouTuber will probably always do. When you find YouTubers that are that big, all they care about is themselves and their money. We've seen it corrupt 1 million people. Like, that's just what happens. And at that point, they make videos for them, not for you. And when you lead by that, like, you got to just choose who you're watching. So they played the YouTube game. You're the one that still clicked the FTX link. You're the one that you probably didn't read the agreement. You just clicked I agree and continued. And that's where you guys messed up as the consumer that got involved in this, because those disclaimers say, hey, this is a risky asset. There's one in there to cover themselves for it. You blew right past it. Whether the right red flags were there or not, you still blew right past all of them. So you can't get 100% upset that your faulty way of doing things is what caused you to be in this mess.
Absolutely.
And let's not forget too, the entire point of cryptocurrency and DeFi in general is that there is not one central point of failure like there is with fiat money. Okay. One entity known as the Federal Reserve can print against our will. They can disperse against our will.
Yes.
They can do all these things against our will. They are the central point of failure, or doing whatever the hell they want. The whole point of DeFi is to try to get rid of that. But here is the catch. You have got to realize how early in this game we are. Me, myself, and anybody who's looking at crypto for the very first time today, you are so early. So we have the answers that Jaime was talking about with transparency, but they're called decentralized exchanges. The problem with that is they're not very user-friendly, but central exchanges are. That's why they attract new people and people who aren't as sophisticated in this space, because they're so simple. So the thing that you can do right now to help yourself is, if you're still going to get in this game, don't have a central point of failure on a central exchange, meaning don't have just one exchange that you use. As big of a pain of an ass as it is to go through KYC, have a third of your money on an FTX pre-implosion, have a third of your money on a Coinbase, and have a third of your money on a Binance. That way, if and when the inevitable happens and that central point of failure is corrupt and collapses, as bad as a third of your funds and portfolio being drained is going to sting, it's a hell of a lot better than 50% or 100%. So KYC sucks and it's annoying, but you shouldn't have all of your money in one place to get nuked. So a lot of that onus is on you.
Then, like, you shouldn't keep money you're not actively trading on the exchange too. You got to secure your bag on your ledger too. So, like, please don't store your money on exchanges. That's not what we're saying. We're saying if you're trading things, it's a good idea not to just have everything in one place, so you can just get one man punched, you know?
Yeah. And you have to enter this space. You can't just enter this space and think you have it figured out. You have got to get in the space and then learn. You do that through trading and then starting to understand protocols and why am I trading this, or why am I holding this bag and not that bag? Why is YouTube blowing up about this particular coin or exchange? You need to always continuously learn. And once you learn, then you will realize, oh, there are decentralized exchanges out there. And you will learn how to navigate the decentralized exchanges, which they have their own problems too. I'm not saying that they are foolproof, but they don't have the same problems as centralized exchanges have. And you see the problems with centralized exchanges are mainly with new investors. It's a lot of new money that gets hit. And people call, like, you know, Mr. Wonderful sophisticated, but is he sophisticated in this place, in this space? I don't think so. I think he's a noob in this space.
Yeah.
Right.
He got taken.
Exactly. And so if you're going to keep money on a centralized exchange, exactly like Brandon said, it should not be your long-term holdings. Those have got to get off onto cold storage, warm storage at worst.
Be careful.
They've got to get off. But you need to get your money in and out when it comes to centralized exchanges. And if you're not going to go deeper and go into DEXs, then at least split your money up between a couple of centralized exchanges. So that way you're just not hit, because everybody's acting like Binance is the savior right now. And I do agree, right now they look like the good guy. But that can change in a heartbeat too. You know, for the longest time, Sam Bankman-Fried was touted as the god of crypto. I mean, he could do no wrong, effective altruism, everything else. No one in a million years would have thought FTX would implode outside of these a couple reports that started coming out a few weeks ago saying this looks, I don't know. So why could it not happen to Binance? So don't put all your money on Binance and think that you're good. You know, I mean, don't put all your money on Coinbase and think that you're good. At least split it up, if not get it off completely.
Right. So the rules should be
the answer. Dirty shovel gang.
It is
dirty shovel gang.
Hashtag dirty shovel gang.
Yeah. Could just not trade crypto. There are plenty of other asset classes out there that are much safer than this, much more liquid. Like there's so many other things outside of like you bought Doge at 10 zeros or something like that, and then it shot up. Outside of like where you're literally naming off how many zeros and then the number. There's so many. There's like so much better ways to trade. Am I saying that right? So much, so many more. There's just
just make up words. You're good.
Yeah, I'm just gonna go with it. They're just not. I don't know. I see the amount of risk that comes with trading crypto. I guess that's the reason I don't trade it. Maybe people should just. That's my takeaway. Maybe you just consider trading something else. Because there are things like protocol and stuff Tamp mentioned, it should be up there. But then why would you want to trade that? Why wouldn't you just want to hold that? So when there is that adoption, when it does come to light that is the good one, then you get those explosive moves up.
This is why I don't trade.
Have all that. Yeah, I trade for a living. I don't trade crypto.
No, and I love what you're saying. And a lot of this stuff is just traditional finance stuff that's been directly brought over to a decentralized space. And people act like because it's in the crypto space, it doesn't have traditional finance issues. It's the exact same thing that you're bringing over, and you're acting like it's going to do the same thing. It's the same, like, you know, some people flee a particular state because of bad politics, and I don't like the you know, they screwed up whatever, California. So all these Californians run into Texas. Well, if you don't do anything different in Texas, why is the outcome going to be any different whatsoever? You're just going to taint another place that was fine before you got there. And that is exactly what has happened with all these people bringing over traditional finance into crypto, but acting like you have different protections. You do not when you use the same centralized entities to execute the same thing you would in traditional finance.
And what does the centralized entity do? Literally, you give them your money and they loan out multiples of your money you just gave them. So in other words, they're creating these pink slips, which is that funny short you guys created with
the IOUs,
Dumb and Dumber. You know, IOU. I keep this one. There's a Ferrari in this one. You know, so you're applying old Venetian 14th century, as one of our commenters mentioned, rules to a new way of transacting or peer-to-peer. That's how the crypto industry was born, is someone actually created, removing the middleman, yet they're trying to force the middleman, or let's put it this way. The middleman is trying to force himself into being the trusted entity. And look what happened. FTX literally started loaning out all of its value. And not just that, using FTT, their own token that had no value, no liquidity, to create this empire and try to push legislation, try to push everything else to keep the middleman where they've been for centuries. So
and that works if you're more embedded in the government, and they were trying to be, but they didn't get as far as they needed to be. And I think that they, you know, what I smell is that all of this was a little too convenient with the timing, Jaime. Like the fact that all the Ripple regulation was starting to kind of come to a head, and conveniently this stuff kind of stacks on top of it. To me, that just kind of looks like some people are really trying to take the regulation in a certain direction for their own benefit. And I could be wrong. Like I'm not.
I feel
truly
the same way, though.
Creating a conspiracy here, but I really do see these correlations, and it seems a little too good to be true.
Absolutely.
We talked about this in one of our first streams. I was here. Was that when the big money comes in, when the big people come in to for regulation, it won't be as decentralized as people think. Like they'll force their way in when they see an actual threat on the banks and a threat to their nest egg. They'll find a way to control it, make it about them, which is almost what we see here. But I do want to get you guys' opinion on one thing really fast. The difference between crypto and the banking system is, one, that's a bigger lie. So as long as everybody believes the bigger lie, like that's kind of what keeps it afloat. But there's the insurance aspect of it. How can we regulate it and keep it insured, but also keep it decentralized?
I have some
code is law.
Too.
Code is law. You can actually code it into the system.
Let me break a few things down. First off, the word cryptocurrency. So crypto comes from the Greek word kryptos. That means hidden. Okay. So all that means is we're using cryptography somewhere in the software program. At some point, there's some data that's hidden behind a encryption algorithm. Okay. Just because you have that does not mean it's centralized or decentralized. The centralized or decentralized piece comes from who has power to change, the ledger, who has power to move funds around. And so a lot of times you may even have something like Bitcoin, for example, that does truly have decentralized power. Like if you aren't holding private keys to your wallet, you can't move stuff around because it would take a huge amount of actual computing resources, so much to the point that it wouldn't be worth the risk to get the reward. And so Bitcoin in that truly is, cryptographically secured, and it is decentralized. Now, if I have a centralized exchange and I say, hey, you can buy Bitcoin, I'm holding the wallet, I have the private keys. If you ask me to buy or sell or send this money somewhere, I'll honor that request, but I'm your daddy. I have your private keys, you don't have them. You can interface with my application and I'll do things on your behalf. But as you see there is a centralized power. Like they can remove you from the picture and you have no honored power inside the system. You can't assert your sovereignty and say, no, we're not doing that. We're doing this over here. I'm keeping this money. You're not sending it. You're not loaning it. So the point here is we have to look with clear eyes. We have to see things as they are. And it's fine if we want to have a centralized traditional style exchange that uses the idea of cryptocurrencies, but just understand it's not really cryptocurrencies. You're not using them as they were architected and designed, and so you're not receiving any of the benefit of self-custody. And so that's why the Dirty Shovel Gang has their own private keys and a dirty shovel. You understand?
Absolutely. No one can make a loan on my own assets without my permission. It's like, which is the mechanism that brought this whole problem down. And here's an article where they interviewed Michael Saylor, and he says Bitcoin will be the winner. Michael Saylor on the FTX collapse. And here's the kicker. He explained, and I'll just quote this article. He says he explained that the collapse of the digital asset exchange FTX came as a result of lack of transparency. According to Saylor, if a company holds cryptocurrency assets, they should be nobody else's liability. You cannot go loaning my money out, that I put in. So I jumped into FTX to trade this asset to that asset. These guys actually use my store of value or what I sent to them to do my transaction for their use and loan out. You need to have full transparency to it, and that's what Bitcoin is. And that's what the FTX token, FTT, was not. And the American entrepreneur believes the ongoing calamity will speed up the implementation of necessary rules in the crypto sector. It's good. Rules are good. The problem is what rules are going to be in there. So he expects only a handful of digital assets will be able to cover the regulatory requirements, with Bitcoin being one of them. Bitcoin will be the winner because Bitcoin is a digital commodity and it's the least controversial of everything. Saylor predicted that the crypto industry will soon move to an era where the leading institutions and big players will enter Bitcoin's ecosystem and as such boost its development and price.
So what does this mean then for for regulation. So you're saying like with regulation, like Bitcoin's kind of becomes the precedent?
No, it's a different asset within the regulation. So there isn't those restrictions. So it's looked upon as a commodity, and it's the hardest asset on the planet at this very moment. Gold, you can still continue mining it,
Right?
But Bitcoin, you cannot.
Yeah,
So,
contrary to Roger Ver, there's no CEO of Bitcoin. So.
Yeah. Craig Wright.
Or Craig Wright and all these other fools that
Craig
are trying
wrong.
We had to define as 40 rules come out because some are going to be a commodity, like you talk about. Some are going to be a currency. And I think that's what confuses a lot of the politicians on that side. Like, do we just chunk it up into its whole group like Forex? That's just all foreign exchange. That's it. Like, so since it's multiple inside one, I think that's where the biggest hangup is. Especially now they got to deal with 40,000. Like, I think that's a little more complicated than people can just come out and say, let's just add rules to it. But I think that's what they're diving into. Like, so like, what was it last year when they first started really splitting it down as far as like, how are we going to tax this thing?
It was way back in Ethereum and XRP is when the true conversation started.
Ripple nipple.
When did they start adding rules? Because I think last year was when they finally said this one's a currency, which one's a security. Yeah.
There were insinuations way back in, if you look to the IRS rules, of a difference between them, but nothing clear. It was more of a guidance.
Yeah.
Now, SEC under Gensler, was in bed with all these fools, is saying everything's a security. Well, that's not necessarily the case, and that's what Michael Saylor's addressing is going to get ugly for everything not Bitcoin. Bitcoin is like they're letting it be as a commodity. They clearly stated it or before Trump, confirmed it under Trump. And, it's been in those years, they've made clear direction and definition of Bitcoin. Everything else, it's still under those. And like we just mentioned on the stream, they started speaking of clarity, XRP saying, or even Library saying, we tried, but we lost. So they're pushing these rules or statements before they're actually confirmed out public. And now they're pushing for that legislation, the very legislation that these guys who got us into this situation, who were duped, the system was duped, the bankers were duped, everybody was duped in this one because there wasn't transparency. There was no clarity on this. And there's an investor, I don't have time to look for it, but he wanted to invest into FTX, and he sent some requirements in there saying, hey, I need to know this, and they told him to go fuck himself.
Yeah, that was a
verbatim.
That was Chamath.
Not embellishment.
Yeah,
that was Chamath Palihapitiya.
Yes.
Was approached by FTX, and basically Chamath was just doing some due diligence.
Yeah.
Providing them with some guidance on actually, creating a board of directors and everything else. And they literally came back and told him to go fuck himself.
Yeah. Can you believe that?
Literally just 2 slides on a PowerPoint and they dropped that kind of salt,
Yeah.
So clearly, many people are just jumping in here blindly, probably blinded by the political agenda or by the bank agenda or whatever agenda they jumped in there for. This guy was one of the few ones asking the right questions, like, hey, let's get some transparency in there. And that's, I think, where we need to get to with your question of what is the right thing. I think that's one of those, is that absolute transparency. If you like it, jump in.
It is,
you know what you're jumping into.
It is interesting. Like, hindsight's 2020, of course, but your major billionaire players saw this as not a good thing, right? Like, I mean, Chamath obviously just wanted to ask some simple questions, and they were like after him. But then, Elon comes out and says that like something smells fishy. Like there were some signs, I think, from some of the bigger investors and just bigger players, the people who had money, real money, right? Like not multi-millions, but multi-billions of dollars. And I think that it was interesting to see kind of there was a line, right? So, but that being said, I know that we wanted to get into another topic as far as Thorchain's concerned, and maybe how this could create some a better way of doing things. I'm not quite sure I'm wording that correctly, Tamp, but I wanted you to kind of take it away with this one.
Well, I think it just plays into exactly what Jaime started out as, I think, the most dead on answer to your first question, Brad. And you were like, what do we do? How do we solve this? And the answer is transparency, period. I mean, that's it. Yeah. I could not agree anymore with that. And that's something that you absolutely get on decentralized exchanges. But what we need to not forget is that we don't need to mistake the events that transpired on a centralized exchange that offers crypto assets as an indication of a breach in trust of decentralized finance as a whole. DeFi is still alive, well, and absolutely will continue onward. The problems here are with centralized exchanges and their lack of transparency, as many have pointed out. I mean, we all do have to, understand that we're still, crypto in general is a big, giant social experiment, right? And we constantly say that we're still early. So if you want to try to win in this space and figure out how do I thrive in this space, first you have to understand that this is absolutely an experiment that you are inside of. It is a huge experiment, and things can go wrong and will go wrong. But what happens is you learn constantly along the way. And every time that you have an exchange or a big event in cryptocurrency, you kind of figure out who has survived, what has worked with that, and let's move forward, onwards and upwards. Like Jaime, a lot of times, what's the word? You compare some things in crypto to like the .com era. And we talked about this off camera a little bit. And in the .com era, before the collapse, a great strategy was, if I have $50,000, let me just shotgun it over everything that says .com and see what sticks. Now, after the implosion of the .com, the sound investing strategy there would be like, I have this $50,000. Let me invest that in 2 or 3 companies that survived, and let's see what happens. That is absolutely where we are right now. That's why I say don't be all in on one thing. But the reason I bring up crypto as an experiment is we constantly have to look at protocols that are solving the problems that we find right now. The biggest threat to cryptocurrency right now is the lack of ability to communicate with other cryptos that have great use case, but you can't access them. And we're not always going to be right every single time in this grand experiment that we're doing called cryptocurrency. But what we can do is try to minimize our losses, minimize how many times we're wrong. And right now, if you are still of the mindset that centralized exchanges are the answer, then I'm going to have to disagree with you completely on that. Inter-chain communication is how we solve problems as we know it today. Because up until this point, everybody knows that Bitcoin is the answer. That, I think, is undeniable. Bitcoin is the answer and everybody knows it. But that doesn't mean that Bitcoin is the answer for every single problem in cryptocurrency that we're going to run into in this grand social experiment. So other protocols have come along and they've tried to strengthen areas in crypto where Bitcoin just is not the perfect answer. Transactions being one of them, especially high-level scaled transactions. So you constantly have to dip between what can I take from the granddaddy of them all, and how do I make this whole space better in this entire grand social experiment? And I will die on the hill that right now it is interchain communication. So if you are not looking at ways to be transparent and communicate, then I think you're going backwards in this space as of today. And one of the ways that you have transparency is through decentralized exchanges that, instead of using a centralized huge pool of money, like here I am, I'm FTX, I have this many billions of dollars to do all these transactions. Instead, what crypto is trying to do is to break up a whole bunch of money into liquid pools per coin. And there's a lot of pros and cons to this. But when you break up liquidity into pools, now you have the ability to hold your keys through an entire transaction process from one crypto to the next. So instead of saying, hey, Sam, I have Bitcoin, I want Ethereum, what you do now is you trust that Sam will take your Bitcoin or value thereof, trade it into Ethereum, and then give you back that money. That is a central point of exchange when you hand over that stuff.
Absolutely.
Instead of doing that now, let's have a humongous group of pooled assets where let's have Bitcoin, like a decentralized exchange. You brought up Thorchain. So that is a decentralized exchange. It's not the only one. It's a good one. There's a lot of them out there, but we brought up Thorchain. So what Thorchain is trying to do is take all these liquid pools. Thorchain has their native currency. It's called Rune. Let's make a Bitcoin Rune pool where if I have $1,000 worth of Bitcoin, I have to match it with $1,000 worth of Rune. Or if I have $1,000 worth of Bitcoin and I don't want to put another $1,000 in, Rune will cut the Bitcoin, the value of it in half, and put $500 in Bitcoin and $500 in Rune, put it in a pool. And they'll do that for every single coin that they hold or that they have access to. And now the deeper those liquidity pools come, when all these people come together and they put Rune and Bitcoin together, now when Don comes along and he's like, I have Bitcoin, I want Ethereum. Now Don comes in, he takes his Bitcoin and the keys that he holds, he puts it into this protocol. Rune has all these different vaults and safes behind the scenes that basically it confirmed Don does have the Bitcoin through his Bitcoin wallet. They hold that Bitcoin in a vault, and then they confirm Don has an Ethereum wallet, and they say, okay, Don has $1,000 of Bitcoin. He wants $1,000 worth of Ethereum, and then they unlock vaults, and then they hold the Bitcoin, and then boom, they give him Ethereum into his Ethereum wallet. But they do it with liquidity pools instead of one centralized giant bank account, which is what FTX and Binance and Coinbase and everything else is. I do agree with Jaime that the best way to handle centralized exchanges right now is transparency, period. They should have to put, once a day or whatever, they should have to absolutely show on the blockchain where their reserves are. But until then, liquidity pools are clearly a better way to do things. But the problem right now is that they're fractured all over the cryptocurrency space. You have liquidity pools on every protocol for every coin and everything. And the problem is simply the communication of all these different protocols to combine all the liquidity pools together.
Right.
If and when we could find a way to combine every liquidity pool over every protocol together, you will have depth in this space so deep that you would literally need trillions and trillions and trillions of dollars to overthrow it, which is highly unlikely. So that's what I know. I kind of went on a little bit of rant, and I want to hear other people. Did good. But until we find a way to be more transparent and communicate so that we can combine our assets, which right now is their liquidity pools, is how you answer this question. Once we figure out how to talk to everything, these type of centralized exchange occurrences collapsing like this, they're a thing of the past. And that is why I constantly harp on holding native assets, being able to swap native assets, and then have all those native assets be able to talk to each other. That is the future of DeFi. And that is something that can absolutely give us the best chance right now to get out of the traditional finance space and have complete control over our financial sovereignty.
Yep, I totally agree.
And I think that's one of the key differences of what you just mentioned, Tam, between what is today and what can be tomorrow. In terms of why a liquidity pool? Well, if it's the fractional reserve system, they're actually giving you IOUs every time you're putting funds in. A liquidity pool is actually access to the assets themselves. The key element about it is you have to be able to pool it globally on a global scale. That would actually take a global event, like massive one, to create a bank run for these assets and tokens that are in this pool. So that's the huge difference. Go ahead, Brendan.
Even in Thorchain's white paper, they cover how they resolve that. But I suppose, we're coming to near the end of our time, but I'll be short with this. The regulation only applies to centralized exchanges, and the reason it applies to the centralized exchanges is because they have to manually intervene. And so the whole concept of the regulation is functionally to create a forcing mechanism. It's to punish people who don't play by certain rules, and they have to manually intervene and meet certain criteria in order to be transparent, like you're saying. Now, if you have code as law, if you have decentralized exchanges, if you have decentralized liquidity pools, for example, code is law. You can read the open source code, you can read the open source smart contracts, and you can know, if you gain some programming sophistication, you can understand it's all out there. You know exactly how it's going to execute. There's nothing hidden, and you can audit the living hell out of it and know for certain it's going to behave a certain way because the code doesn't have an opinion. It's not partial to any one person. So we do need to move in that direction so that I don't have to trust any person that I'm interacting with. The code is just going to execute as it needs to, and there's not going to be backdoors because it's open source, right?
Yes. And to very quickly say what Brandon said, what took down FTX cannot happen in decentralized finance. Period. Right. As far as decentralized exchanges, period, full stop. Decentralized exchanges, they have a whole host of problems as well that could happen, but specifically what brought down FTX could not happen and would not happen in a decentralized exchange because of code. Code would not allow Alameda and FTX to be in bed together. They would not allow the spending of certain pools of money. It would not allow user funds to be invested in any other way other than in a reserve tank. And so it simply could not have happened on a decentralized exchange, full stop.
Yeah, absolutely.
And what website, give out a website. Where can I go to read the code, the white pages, anything about it? Because how can I discern Thor versus Wakanda?
So I specifically have a series where I'm reading white papers and explaining the whole process if people want to get deep into the engineering technical side of things.
Join Discord.
Jump in our Discord, ask whatever questions you have, and we'll explore that together.
Yeah, but that's it. That's simply, you would have to look at what is a centralized exchange, Don, versus what is a decentralized exchange.
Or DEX.
Or a SEX and a DEX. They're common terms in crypto. And if you don't know those yet, frankly, keep your money in your wallet. Like you have to play with this stuff and understand it before you just go yeeting and aping into stuff.
I like the term KEX.
Decentralized exchanges. We mentioned Thorchain. Nomic is one that's going to be coming out. You have Sushi Swap, you have Uniswap, you have Pancake Swap, you have Curve, you have those sort of things. Centralized exchanges, it was things like FTX. Binance is a centralized exchange and a powerful one. Coinbase, same thing. Huobi, Kraken, KuCoin, all these sort of things. Now, some of them are trying to implement ways to have trust in the public, like a visible, transparent reserve. And those are all very good things, tools to have for them to try to say, we're doing the best to show that we're legit, but they are they are absolutely a centralized exchange. And it's just important that you know the difference between the two in this space.
Yeah. And we can deep dive into these. We're seeing a few questions come up. So we will make an episode about a DEX, sex, and the rest.
We'll whip our decks out for you.
Yeah, that's right.
So yes,
the best content ideas come from from everyone else.
That's
comments, questions, interactions. Yes. We need to close that gap between crypto nerd and consumer.
Yeah, and you're dead on. And the issue with that is, and why I keep saying we're early, is because obviously it makes the most sense. Like, why wouldn't they just funnel new people into decentralized exchanges then, if they're so easy and they solve all these problems? It's a great point. But the problem is because they're not user friendly yet. And that's the biggest issue with them, is noobs it's very unlikely they would know how to navigate a decentralized exchange.
Yeah.
A centralized exchange, though, The trade-off for how, their single point of failure is that they're very, very easy to navigate. They're very simple on a relative scale. And that's why new money flocks to them. And I understand that. But again, we're still working. We're still moving forward toward things, which is why I will stand on the hill that right now our best thing to move forward is to look at protocols that solve the communication problem, protocol to protocol in cryptocurrency. That is the next big hurdle to getting decentralized exchanges more user friendly and more noob friendly, to where centralized exchanges can be a thing of the past, or the thing for the regulators and for the corporations. They can go play in that land, because DeFi for the typical consumer is your answer for a lot of the traditional finance problems and the melting of our currency. We're just not at a user-friendly version of it yet. We're getting there.
We have to build the house before you can move in. Sorry, kids.
Absolutely.
Exactly. We're building it.
But we're here to share everything.
That's right. And the best way to go learn more about this, guys, is in our Discord. We can continue the conversation there. We really sincerely thank you for tuning in. If you guys are visiting for the first time, welcome. Make sure you hit that subscribe button, hit that like as well, to show us some love and some support. We certainly would appreciate that as well. We'll be back live on Wednesday, as long as nothing else crazy happens, at 9 a.m. Eastern time, as our regularly scheduled programming takes place. But before we let you guys go, we can't go without birthdays. So today, November 14th, is King Charles III's birthday. He's 73. Travis Barker is 46 years old. What the hell? Then we also, I think that's actually it. Steve Cash, rest in peace, was a YouTube star. He would have been 41. Then we have, of course, Candy Cane, who is 62. Our first big, beautiful woman here on our birthdays. She was best known for I Want It All, Muffin Stuffing. Let me tell you about Fat Chicks, Classic Bitches in Heat 2, and 2 tons of fun. Guys, thanks so much for tuning in. We'll certainly see you all on Wednesday. Make sure you're hitting that subscribe, like, notification bell. You know what to do. We'll see you all. We'll see you all on Wednesday. Keep calm and huddle on. Bitches.
Dirty Shovel Gang.
Let's go.